Hi, this is Vijay Bambani, and I'm back with you again to talk about a very critical aspect of trading. Do forward projections really work in trading? Please do remember, I'm talking purely about trading and not about long term investing. The life of a trader is not an easy one. There are so many imponderables, variables, and news flow which can impact prices and basically act against you in the near term. And yet, you will hear so many forward targets being put out in the public domain, in the media, social media, etc., about how the market will be at so and so level by so and so time frame and then XYZ level in another XYZ time frame. Is it really as simple as that? And is it really effective? Now, there is a school of thought in financial markets which believes in the efficient market hypothesis put forth by Eugene Fama, a well known university professor in the United States of America. The Eugene Fama theory, called the efficient market hypothesis, believes that all market participants are rational human beings, they act mathematically, and they have all the knowledge that is required to basically trade or invest in the market, and therefore everybody behaves rationally. Unfortunately, this happens to be true only in classrooms. In the real world, we are emotional human beings who are susceptible to fear, to greed, to worries, and to anxieties, which is to say that we are not 100% rational. And therefore, when things start to go against us, we succumb to emotions and then we take knee-jerk reactions. Now, this is the imponderable, or this is the unpredictable aspect of the market which can hit your trade at any given point in time. To that extent, is it very logical to put out medium to long-term targets for your trades? I would beg to differ. Let me give you a real-world example. If I was to collect a few people in a very different kind of a race, the race is to climb the stairs of a 15-story building. If I was to allow you to take a break at the 5th floor, the 10th floor, and then finally stop at the 15th floor. If at all everybody managed to climb to the 5th floor, the first stop, in 2 minutes, is it logical to say that everybody would be able to climb to the 15th floor in 6 minutes, which is 3 times of 2 minutes? You would obviously say, hey, that's not possible because the first 5 floors were the easiest to climb. The second batch of 5 floors, the climber would be a little tired, and in the third set of 5 floors, your knees and your thighs would start to swell, your lungs will ask for more and more oxygen, would be sweaty, and therefore your climb would be slower. Welcome to the markets. This is why linear extrapolation, this is a statistical term. Linear extrapolation is saying that if a moving body took X amount of time to move from point A to point B, it will take exactly the same amount of time to move from point B to point C, and then the same amount of time to move from point C to point D, which is why the efficient market hypothesis does not really work in the market. So in trading, there is something called the force of gravity. The further the security moves higher, the slower will be the ascent or the climb. You basically will have to account for that, which is why linear extrapolation, or simply saying that because the Nifty rose 50 points every day for the last 2 sessions, it will rise by 50 more points in tomorrow's session, is a faulty presumption. Take each day as it comes and do not listen to the efficient market hypothesis blindly. What is a cure for having to trade in a market which is so uncertain? I would say keep your eyes glued on to your trading terminal and keep your snapquote window on at all times. Your snapquote window pops up anytime you highlight a security and click on F5. This is your trader's cockpit. Keep noting how the prices are moving. If in every half an hour time frame the prices continue to rise, the momentum is still bullish. If you're short, you want prices to keep declining in every half an hour time frame, in which case the momentum is bearish and you should stay short. Keep an eye on stock price charts or commodity or currency charts, whatever you're trading as an asset class. As long as the trend is your friend, continue to ride the trend. But the time you see your trend coming under attack or coming under threat or the momentum slowing down, remember, it may be time to step off the bus. So, do not try to make forward projections as easily as it is being made out to be in the social and the mainstream media. Everybody needs to do their homework and do not take movements in any security and its underlying taken for granted. I'm keen on hearing from you what you think of this video. In the comment section, do let me know your feedback and what further queries you would want to raise for me to answer for you. Please do click on like on this video. Do share it with family and friends and subscribe to my YouTube channel where I share more and more investing and trading ideas every day. Till I see you again, this is Vijay Bambwani signing off for now. Please do take very good care of your trades and investments. Thank you.